Hey everyone, and welcome to The Explainer. Today, we're going to unpack the corporate strategy and the executive decision-making driving U.S. Gold Corp. A lot of times we look at mining companies purely through the lens of geology, right? The actual rocks in the ground. But today, we're taking a completely different approach. We are stepping straight into the boardroom. We're going to examine exactly how an experienced leadership team navigates everything from project development and capital allocation to really strict corporate governance, all to build value in the domestic U.S. mining sector. Okay, so here's our game plan for today. We've got 5 key areas to cover. We'll hit the executive mandate, a strategic pivot, project oversight at the CK Gold project, corporate governance and structure, and then we'll wrap up with the future outlook and strategy. Let's get into it. All right, part 1, the executive mandate, or as I like to call it, assembling the brain trust. Look, every successful corporate vision has to start with the people tasked with actually executing it. And a successful mining company is definitely not just a bunch of geologists out in the field. It requires a seriously diversified executive skill set. Take CEO George B., for example. He brings this massive operational pedigree from industry giants. We're talking Barrick Gold and Rio Tinto. Then you've got Eric Alexander, overseeing the financial stewardship as CFO, coming in with a heavy-hitting background from KPMG. Kevin Francis is leading the technical exploration side of things, while Chairman Luke Norman brings literally decades of capital markets and venture capital experience. This isn't random. It's a deliberate, strategic assembly of specializations perfectly aligned to drive the company's mandate forward. Moving right along to Section 2, a strategic pivot. This is where they go from exploration to development. So, in business, knowing exactly when to shift your operational focus is absolutely crucial. It is often the single difference between stagnation and explosive growth. Back in August of 2020, management made a huge move. They executed a strategic pivot away from being just a pure exploration company and turned their primary focus toward active project development. And because they committed to development right then and there, they were able to massively accelerate their milestones. They delivered a comprehensive pre-feasibility study for the CK Gold project in February 2025, and now they're pushing straight into their feasibility study and major permitting approvals in 2026. It is a textbook example of how executive focus creates real operational momentum. Which brings us to Section 3, project oversight at CK Gold. Let's look at this execution in action. This flagship asset in Wyoming is basically a masterclass in how this executive team applies its oversight to actual on-the-ground execution. When you look at the projected mine costs, the most crucial data point is the $277 million initial capital expenditure. Now, in the mining industry, capital costs can literally spiral into the billions without anyone blinking an eye, and that introduces massive execution risk. By designing a project with an intentionally manageable capex of $277 million, the team is completely minimizing financial risk. It just makes the whole project so much easier to fund through debt, equity, or offtake agreements, all without over-leveraging the balance sheet. And that precise oversight, it translates directly into incredibly robust economics. We're talking about a rapid payback period of 1.7 to 2.5 years, meaning the project aims to recoup its initial investment remarkably fast. Depending on metal prices, the net present value ranges from $356 million all the way up to an upside of $745 million, with an internal rate of return reaching up to 50%. But look, the executives aren't just managing the money. They're actively managing the risk profile too. They're executing strict environmental permitting strategies alongside local Wyoming firms like Tri-Hydro Corp and Greenlight LLC to make absolutely sure they have the community and regulatory support they need to actually get this thing built. All right, part 4, corporate governance and structure. Let's talk about managing capital. You can't have a strong project without disciplined financial stewardship. As of late 2025, U.S. Gold Corp maintains this notably lean capital structure with just 14.3 million shares outstanding. The vast majority, about 83.2%, are common shares, with the rest made up of manageable warrants and options. Let me tell you, for a development stage mining company, having a share count this low is incredibly rare. It's a highly deliberate, protective measure designed by management to keep dilution for their investors to an absolute minimum. But that raises an essential corporate strategy question, right? One we should all be asking. How does keeping share counts that low actually influence project execution and shareholder value on a day-to-day basis? Well, it really boils down to 2 things: leverage and alignment. This super lean approach provides direct leverage to the project's upside. Think about it. Because there are fewer shares slicing up the pie, any value created at the CK Gold project has a highly concentrated, massive impact on the stock. Plus, it essentially forces disciplined capital allocation. Management has to be incredibly careful with how they fund development, carefully balancing operational risks with financial stability to avoid needlessly diluting their shareholders. It perfectly aligns the executive team's success with the investor's success.
Finally, Section 5, the future outlook and strategy. Let's get to the bottom line.
So how is Wall Street actually analyzing all these governance and operational decisions as we sit here looking at the data in 2026? Well, analysts tracking these fundamentals have modeled an average price target of $26.75. This valuation relies heavily on the financial models of the CK Gold project combined with the underlying value of their exploration portfolio. Basically, Wall Street is looking at that manageable capex, the super fast payback, and that incredibly lean share structure and modeling out exactly what that operational discipline is worth.
To put that into perspective, that target represents an estimated 71.7% upside from recent trading levels. This Wall Street projection is driven largely by the management team's successful delivery of the 2026 feasibility study and securing those major operating permits, which has prompted some really strong buy ratings from analysts following the stock. I want to leave you with this thought from CEO George B. While Wall Street's current models are based on an initial 11-year mine plan for CK Gold, the overarching executive vision absolutely does not stop there. He notes that the project offers a, quote, multi-decade opportunity, which begs the ultimate question for anyone studying corporate strategy. When a management team successfully executes a pivot, fiercely protects its capital structure, and delivers a fully permitted project, what other long-term value can that exact same playbook unlock in the decades to come? Thanks so much for joining me on this explainer. I'll catch you next time.